reports are suggesting that Vestas has unveiled its war chest with a rumored Suzlon acquisition. They're planning to pick up a stake in Suzlon. And to talk more about this and what this means, we are joined by Shashi Barla, who is the principal analyst at Global Wind Supply Chain and Technology at Mackenzie. Good morning, Shashi. Thanks for joining us this morning. What's your sense in terms of Vestas investing in Suzlon?
Well, one of the key things is, it's a question of who's putting in the money, because now Vestas has roughly about 3 billion euros of cash and cash equivalents that they could use at their disposal to acquire some of the companies, whether it's organic or inorganic. And so I would assume that the deal is being shaped up in such a way that Vestas would acquire first a part stake in Suzlon, and then they would make an open offer for the remaining shares, which means that they would eventually they might be taking over full control of Suzlon. Or the other aspect that we think is also could be that Suzlon and existing shareholders and Vestas could also share the stake in some of the business units. They could eventually split up Suzlon, so the product business and the operations and maintenance business, which is called a service business in the Vestas parlance. So they could split up the service business, because service business is most profitable business. If you look at the EBIT margins, for the Vestas, the product EBIT margins are about 8.5%, while the service margins are EBIT margins are roughly about 25 to 26% in 2018. So it's logical that they would like to focus on the service business too, which is the most profitable and lucrative business. So there could be multiple scenarios on how the deal is going to materialize, if at all it's going to. So I think this is my take on the deal structure itself.
So how do you go about valuing the Suzlon assets, Shashi?
Well, the valuation is a little bit complex here, because looking at the share price today, it's roughly traded about upwards of $400 million. And when Vestas is putting the offer on the table, they would also consider this aspect, whether they're acquiring a part stake or they're acquiring a full stake. So the valuation itself is the critical piece of this whole deal, and because looking at the current share prices, which is I remember roughly it should be about INR 6 to 7 per share, while the bond holders, which they were redeeming the FCCBs at INR 15 per share. So they need to convince Vestas what is the price that they would pay for whatever it's part stake or full stake in Suzlon eventually. So the valuation could shoot up to upwards of $1 to $1.1 billion. So it's up to the two companies to decide on what do they consider in valuing the company, whether it is taking the share price into consideration, or whether you want to value all the manufacturing assets and the intangible assets like intellectual property and so forth. So it would be definitely a complex negotiation between the two parties or multiple parties in this discussion on the valuation itself, because that's critical for both Suzlon and as well as Vestas.
All right, Shashi, we'll leave it at there. That's Shashi Barla from Mackenzie giving his take on Vestas' interest in Suzlon.